Okay, looks like we're live here. Good afternoon, everybody. It is Friday, the 26th of March, 2010. Let's take a look at these markets here. We'll start with the S&P 500, and I guess I've got to share that screen, so let me get that over there for you. Here we are. Let's take a look here. Like I said, we've got the S&P 500 on right now, and this is the let me just resize this over here for a moment. So we've got the S&P 500 looking at a 65-minute time frame, and this 65-minute time frame goes back to basically the very beginning of the year here, and we're looking at a 5, 10, and 20-day moving average. So what we saw this week was a little bit of indecisiveness. We've broken that trend line that's been in place since the February lows. And now we're just kind of turning a little bit sideways here. We had obviously the 117.50 level that was resistance broken yesterday. The market failed at that area, and now when we look at the 2-day price, and this is what I was talking about actually with a subscriber earlier on Twitter today, was that the 2-day volume weighted average price is where we had found some resistance today. The market seemed to want to hold that pivot level, but when it broke the pivot, that's when we really had the market give up the gains that were there early on. So altogether, you know, we did lose 7 cents on the S&P 500 for the day. If we take a look at the week, we did start with a gap higher, or was that actually we started with a gap lower rather. But the average price in the S&P 500 this week was right up at about 116.92. So on average, the the average long is losing money from this week, and very short-term oriented analysis here, obviously, but still worth noting that on a volume-weighted basis, the average long participant is losing losing a very small amount though of money this week. I pointed out yesterday that we had seen a couple days of bigger volume in here the last, let's just kind of zoom in on that so we can kind of see that a little bit more clearly. But the bigger volume has come on these 2 days where we had these big red candles. Now, big volume without further upside progress typically means distribution. Obviously, that's something worth noting. That is that we want to be aware that we're not making the upward progress here. But it's not a reason to sell short. It's a reason to mind your long positions and say, if we're getting a little bit of distribution here, then what's next for the market? Are we likely to roll over and die? And it doesn't really seem likely that we are going to roll over and die in this market. We've got this uptrend line that let me just change that scaling slightly so we can see that here on the daily time frame. So we've got this daily, and on the daily time frame, it doesn't look like we broke it, but are holding it in fact. So that's kind of interesting to see. Anyways, trend lines aren't meant to be a trading system, just kind of a visual reference point. And breaking a trend line can occur just by going sideways as well. So it might mean that we're just due for a little bit more of a sideways corrective activity. The bigger level, obviously, is this 115.10 area. We had seen it tested on Monday, and now we're comfortably above it. But for the week, the average price was a little bit higher, so that's just something to be aware of, not really reason for concern. We've had a real nice rally here over the last month and a half, 2 months, and now we're maybe tiring a little bit here, but you look at the weekly time frame, we're still in a very nice uptrend, as I've been pointing out. We've got this larger Fibonacci level that we want to be aware of, but just to be aware of, it doesn't mean that we're going to go straight for any of these types of levels, that is Fibonacci or prior trends or moving averages, but there's something to be aware of, and in this case the 61.8% retracement does happen to fall in at this prior support level, which when broken led to the bigger decline. So that's just something to keep in the back of your mind. Anyways, so let's take a look back at this bigger picture here a little bit. Don't want to get anyone dizzy with that, but just wanted to back that up a little bit. And we can still see, obviously, we remain in a nice uptrend, except for the shorter term time frames. Now today, here on this 10-minute time frame, I pointed out midday that this 116.60 area had been support for a couple days this week, really, and where we had fallen to yesterday, right down to that 116.60 level, bounced this morning, and then cut down through it. So now it still looks like we closed right below it, and support broken tends to act as resistance. And very short term, that is just from yesterday and today, we do have lower highs and lower lows here. So let's just take a look at that. So here's our lower highs, it looks like, and lower lows. So until this market can recover and get back above 117.50, then we're going to see just maybe some more corrective action, either, again, sideways through time, or perhaps through further price correction down towards that 115 area that we know is important on the larger term time frame. So it seems to me as though maybe it's just getting a little bit tired in here, and time to just be aware of where your stops are, what you're looking at, and perhaps taking a little bit of money off the table if you have longer term positions. But really, until we break down below and probably close below that 115 area, you still have to be impressed with the resilience of this market and give the benefit of the doubt to the buyers. The Nasdaq was up on the week as well. That same trend line isn't quite as or isn't in focus the way on that longer term from the February lows, that is, like it is on the S&P 500. I've been talking about this trend line here, which was tested again, and that's also where we see that rising 10-day moving average. That's the 60 period on this 65-minute time frame. And the bigger level of importance for the Nasdaq, for the Qs, is down at 46.60. That's the January highs, and that's approximately where, if you went straight down, you would see this rising trend line as well. So it seems realistic to look for maybe a test of that trend line and that those January levels, and then we'll have to see how the market responds after that. Now, in the Nasdaq, we had a little bit of an important near-term level that was it was fought for today, basically. It's not really clear, but this 47.80 area, we did break down below it, got back up above on the closing basis, and we do have, the 5-day moving average is still rising, and generally innocent until proven guilty while it's above that, or while the 5-day moving average is advancing. So if we back that up to that 65-minute time frame again, you can see that we've tested that 10-day moving average a couple times here, and if we get a breakdown, probably through today's lows, which are down near about 47.75, you can see that was an important level for this week as well, 47.75. If we take a look at the volume weighted average price for the week, and here's that 47.75 area, where we did find support pretty much to the penny today, but it was pretty much a neutral week here for the Nasdaq in terms of who took control really this week, the buyers or sellers. And I say it's neutral because we basically closed very close to that volume weighted average price for the week, for the last 5 days, that is. By the way, if you have any questions, so you want me to take a look here at a stock, then go ahead and type those into Twitter, and I'll get to a couple of those here today as well. But backing it up to the daily time frame again, there's that level from the January highs that's been going to be an area of focus if we see this market pull back further. The weekly time frame, we're still in a great uptrend. We're battling with this level from the peak of August of 08, and if we can get up through there, then it looks like the next potential level of resistance is up just above $50 a share. So still a very healthy uptrend. We're not breaking down. We're slowing down, but I mean, you can't expect a rally like this to just continue to go forward at the pace that it has been without some corrective activity, either price-wise or time-wise. So I think it continues to be impressive action. The Russell 2000, which has been the leader this year, again, here's the January highs for this market. We know that they had been tested as support near that 67 or 64.80 level rather. And near term, we've got a more important area right here at about $66.60. So that 66.60 level is something that we'll focus on early next week. If we break down through that, then I think that you've got a pretty good chance of the market dropping back down towards this level, 65.40, and then of course that 64.80 as well. Now on a 10-minute time frame, we're seeing a little bit well, here, if we take a look and kind of draw a line straight across there near that 68 level, it would have been nicer to see it maybe closing above that on the week. But again, we've got just some near-term indecisiveness is really the way you want to look at this for now. We broke above this little resistance at 68.90 and did make new highs on Thursday, but obviously, same story in here. We had the 2-day volume weighted average price that the market couldn't get back up to in the Russell, and now again we want to keep focused. I think early next week on that 67 level and really $66.80. So that's going to be the key, I think, next week to this market. If we break those, then it becomes pretty likely in my mind that we break down towards the January highs. And I wouldn't be looking at that as the top of the market necessarily, but you only know well in hindsight whether it was a top of any significance or not. But it would definitely get our attention and create a need for a more defensive posture. The semiconductors, you look at the daily time frame, they're still in a nice uptrend. They're still showing just a real clear pattern of higher highs and higher lows. We've got, even today, we have a higher low, and these higher lows have been very consistent and steady stair-step higher. We saw a new high for the year in these semiconductors on a closing basis on Tuesday, and we've had a pullback in there. It doesn't look like a big rush to the exits. The only area where the semiconductors look like maybe we should have a little bit of concern is on the short-term basis. This 27.90 broke as support, and the market, the semis held below that. So on the basis of Monday through Friday of this week, we've seen that the average price was up at 28.10. So a little bit more damage done maybe to the longs who participated this week than in the other markets, but still, you look at that 65-minute time frame, and we've got just some clear levels in here that this market is going to continue to focus on. In particular, $27.20 and $27.40 in the near term. If we break below those levels, then we'll be looking at this 26.60 area again, and we break that 26.60, then we're back below the 50-day moving average, and things could maybe get a little bit uglier in here. So the semiconductors are definitely worth keeping an eye on. The financials, we had seen a run yesterday that might have appeared climactic on the daily time frame, and today's volume as well. So you look at the weekly time frame, you're going to see that we did have a bigger increase in volume. However, we did close with gains on the week, and you look at this weekly chart, you can't create a bearish technical argument, really. You look at it and say we've cleared some important significant resistance at 1540 and 1575, and here we are making runs up for some of these levels, 1660, and then maybe up towards the $18 level that were more significant back in 2008 from the bigger breakdown level. The only bearish argument really here in the financials is that they've come too far too fast, but realistically, you look at the definition of trend, we're still showing higher highs and higher lows, and that's really what's important here, is that price continues to focus up. Don't let your opinion get in the way of that. We saw that this $16 level was defended successfully on a closing basis, so that was kind of impressive. We are above the 5-day moving average, and for the week the average price was defended as well. So on average, the financials were really stronger, if you not necessarily in the terms of percentage move or anything like that, although that actually might be the case, but in terms of psychological, the psychology of the participants, the buyers of the financials on average are feeling better in the financials, obviously, than they do in the semiconductors, where on average they're down 30 cents. So anyways, back to the daily time frame. We're seeing some bigger volume without further upside progress. So if we break down below this 16 level, then we want to look at what are our next important areas where we have the potential for support. 1540 to 1550 is really that level, and in particular 1540. If we get a breakdown towards that 1540, I don't think it's the end of the world. I don't think it's the end of it's obviously not the end of the world, but I don't think it's the end of the rally for the financials as well. We got a little bit extended here. We come down and test that level, and then we'll see, then we'll have to reassess where we are overall. Oil, just taking a look at the USO, really, unless you look at the daily time frame, crossing back and forth above and below all these moving averages, they're crossing back and forth. Really, to me, unless you're just into oil, it seems like a waste of time to me. The IYR has got some just incredible strength as well. It closed below the 10-day moving average for the first time since getting back above it mid-February. I wouldn't read too much into that, although this market, you could see a pullback maybe towards 48 if we start to see some further deterioration. And I think this will be an important level early next week at about 49.60. And then we want to look at some of these other areas at 48.40, and then down probably near about 47.60-ish. So one area that was really strong this week was these retail holders, the RTH. We could see 5 days, they were up four of the 5 days, slight pullback on Wednesday, but the retail stocks continue to pretty much lead this market. We're into an area where you would expect to find resistance, but perhaps we're going to head up towards the 104 area as well. You just can't fight this kind of momentum. It just remains innocent until proven guilty. All these time frames are showing strength here on the retail stocks, and we'd seen a couple tests of the 10-day moving average, bounced right off of that, took out this resistance, and held above it. So 106.5, 106.6, or I don't know why I said 106, but $100.60, $100.60 will be important early next week. I saw some talk about the XLE, how that was breaking down, and realistically, the XLE it's breaking down, I guess, but it's really still in this bigger range here. It's pretty much neutral, breaking down from the midpoint of that range maybe, but doesn't look like a big breakdown necessarily. So what else did I want to look at was well, gold. Gold looks like just kind of more neutral market in here than anything, and so there was a lot of talk about interest rates, the TBT in particular. Still not, it's not broken out. It's still within this bigger range. It's getting more, it's getting more strength, I guess. Somebody called this a breakout a couple weeks ago, I remember, and we've got support down here at 46.5. We've got what looks like resistance up at 51, 51.10. If we can get above that, I think it's going to take a little bit of backing and filling. But here's the bigger level: that if we get above that 51.20. Then you can call these the 20-year yield at least in an uptrend. Big volume this week, so that's some big money is shifting out of bonds and getting that interest rates to rise. So this is the key level to focus on, though. I think we're going to see, we've seen many pops that just end up failing. Let's see, if this one can maybe hold on a little bit. So let's take a look now at some of the stocks that you guys have typed in here on Twitter. And